Now we will start the discussion of the question 3 part B. As usual, what I am doing, I am only analyzing the question number because the answers are there. Therefore, I need to take you all to the approach to the question and the answer format. That's all. The again repeating of the answers I am not doing, but as it is necessary, I am going for the answer and I will discuss. Okay. Then come to the question. It is question B. It's for the 10 marks. Question 3 part B for the 10 marks. Advise the senior management of HCL. What's your action verb, Lama? It is advise HCL senior management on the possible tax implication. Possible tax implication or tax benefits. What are the tax implications? Negative sides, the positive sides or tax benefits. Can I go for the exemptions? Can I go for the qualifying payments? Can I go for the concessions? Likewise, under the provisions of the Inland Revenue Act number 24 of 2017 for the following proposals. But now one thing in it is it's only quoted the Inland Revenue Act, but in the finally it has asked the VAT implications also. Therefore, don't think that if it is asked from the Inland Revenue Act, why I am writing the VAT implication, but you should write, Lamai. It's asking the evaluation of proposals, you should have to write the VAT implications also. Okay. Then it is your requirement. You have to advise to senior manager on the possible tax implications and the benefit. On what? On proposal. What is the proposal? Proposal to separate the leisure and travel sector and the logistics sector. Now these are as per the pre-seen, as per the unseen information also, these are under the umbrella of the HCL as the SBUs. The strategic or special business units, these are there. Then we are going to separate it. HCL is going to separate the travel and leisure sector and the logistics sector from the HCL by forming two fully owned subsidiaries of HCL. Now, how to separate? The separation is going. There is a HCL. Now, these two are under the umbrella of the HCL, the leisure and tour sector and the logistics sector. Now, what the new proposal? New proposal is going to separate this to new fully owned subsidiary. Fully owned subsidiaries of HCL. HCL. This is the proposal. Okay. This is the so-called proposal. This is the so-called proposal. Done. After that, it is telling your answer should be discuss the following points. Income tax and VAT implication on the transfer of asset, depreciable asset and the capital asset from the side of HCL point of view, applicable income tax rate for the newly formed companies with reasons. That's all for the 10 marks. Now, how are you going to approach the question, Lamai? Before that, let me analyze this situation. First, we will go to this analysis and we will come to that. Now, you can see in the pre-seen information, there are the originally 5 main the SBUs are there. Leisure and travels and logistics is one of these within 5, one is one of 2. Then this is under SBUs, the diversified businesses SBUs, but now we are going to separate this. Okay. Then we will come to the analysis of the question. Question 3 part B. What is the action verb? It is advise. It's a tier 5. It's a higher tier within the evaluation of the topic of the evaluation this has. What's the requirement? Advise on possible tax implications or tax benefit as per the Inland Revenue Act number 24 of 2017. On what you have to give the advice? Proposal to separate the leisure and travel sector and the logistics sector from HCL. That is the proposal. how to separate forming two fully owned subsidiaries of HCL. Coverage of the answer. Now, how examiner telling you to cover this answer? You have to write income tax and VAT implications on the transfer asset from HCL point of view. HCL is transferring the assets of travel and leisure sector and the logistics sector to these new companies. Then what is the implication on depreciable asset and the capital asset? What is the income tax implication and the VAT implication, and what is the applicable income tax rate for new companies? Lamai, this is for 10 marks, time allocation 18 minutes. There may be surprise questions in your examination, whether you even did not think, if something happened like this, how I can face. But Lamai, from that 10 marks, if there are very difficult, tough questions in the examination paper, try to score 50 marks. The 10 out of 5, sorry, the 5 out of 10, try to gain that marks. Then, yes, we know there are difficult questions in the examination, it's a way of the papers. But you need to pass 50. To take that 50, you have to attempt to the 100% of the marks. It is the natural thing. But Lamai, if something, the lot of students are struggling on these questions, then the only thing what you know now, if you are in thinking about what is income tax implication, what is this, how to approach to this. If you don't know anything, the application of income tax rate for new companies, you can write that, no. For the first part, if it is not coming anything to your mind, start from what you know. By separating that two companies under the predominantly concept, Lamai, can please go and check, can I apply 14%? Then one part you have done. I am analyzing the question now, then come to this analysis part of the question. This is the proposal. I will remove this and I will start from your approach to answer. This is your answer format and approach to the question. Okay. This is approach to the question, not the answer. Approach to the question. This is question 3 part B. Question 3 part B. Okay. Then what is our the question? You have to look at on possible tax implication. Possible tax implications. Possible tax implications or tax benefit. Or tax benefits. Then you have to advise on this. There is a proposal. On this proposal, the separate leisure and tour and the logistics sector. Logistic sector. Then how it going to separate? How to separate? It is the owning of the fully owned subsidiary. Go for the fully owned subsidiary. Fully owned subsidiary as a fully owned subsidiary. This is the information given by the examiner, Lamai. This is the information given by the examiner. Now, how you are going to approach to the question? Okay. Now, as the approach to the question, examiner is asking Lamai two things. What are those two things? One is examiner is asking, your answer should be in the income tax and VAT implications. VAT implications, income tax and the VAT implication. On the transfer of the asset. On the transfer of the asset, it's on the transfer of assets. Then after that, in the second part, it is talking about the income tax rates. Income tax rates. It's asking about the income tax, the rates. Okay, these are the two points they are asking. Then it is come to this part. It is the I am going to decide. Now I am first taking the income tax and the VAT implications. How it going to take? Then income tax and the VAT implication. Income tax. We will take this side income tax. This side VAT. Income tax and VAT implication. What is the question itself? It is asking not the income tax and VAT implications on all these perspective. The examiner is asking income tax and VAT implication on the transfer of asset. Now income tax and VAT implication of the transfer of asset. Transfer of asset. What are the now lamai? Start from what you know. Danna deyin patan aragen issarahata yanna. Transfer of asset. What are the asset categories you all know? They are capital asset of the business. Capital asset of the business. And this is a business. Don't mix with the investment asset. And the depreciable asset. Depreciable asset. The second one is the depreciable asset. Then under that, capital asset of the business and the depreciable asset. These are the two kind of asset we have. Now you have to think this. Now there is a separation of leisure and travels and the logistics. How to separate? As the fully owned subsidiary. Now what happened in here lamai, I will take in this, since I don't have much space, I will take it here to all of you to see this. The HCL has to transfer assets of this leisure and tour and the logistics which belong to SCL now to new companies. To new companies. That is the question. Did you recognize this one? That is the first thing lamai. You have to recognize this. Mehema dekakata kadeddi HCL has to transfer asset to new companies. Again, the second point which you have to, this is the first one. The second point which you have to recognize, what is the relationship between HCL and the new companies? What are those? These are the associated person. Associated person is the second thing. This is the approach to the question. Then third thing, did you recognize when transfer, what is the meaning of the transfer? It's a change in of the ownership of the asset. If a asset belongs to HCL, transfer to new companies, it is what? Realization. Realization under section 39. ඔයගොල්ලෝ මේ ටික දැනගෙන හිටියානම් you can approach the question very well. Plus these areas. It's not easy. I know that, but you have to try on these things. Okay? Then without knowing these things, it is difficult to approach the question. You all write in something, I don't know. Then if you know these things, next is easy. Now I am applying these theoretical, this is a highly theoretical area. I am applying it to the given scenario. Okay, application. Now I am doing application. This is the theory. First, this is the analysis of the question. This is analysis of the question. The 1, 2, 3 is the what are the theoretical part you need to know. And theory දැනගත්තට වැඩක් නැහැ ළමයි. If you have not recognized this, HCL transfer asset to the new company is a realization. Then this is a theory and then the application. Okay, come to this transfer of asset, capital asset of the business and the depreciable asset at the point of the transfer, the change in of ownership, the realization is happened as per section 39. At the realization, if a capital asset of the business under section 6 subsection 2c, this is liable. Depreciable asset under section 6 subsection 2d, it is liable. This is normal, you know. Okay, under section the 39, the realization, transfer is a realization of the asset. If it is, go for the section 39a, person who owns asset shall be treated as realized when that person parts. If he has the avoid the ownership with the ownership of the asset including transfer. It is section 39 provision. Okay. Now this is a normal provision. Anyway, your answer should include this. Second one is, this is special situation. Transfer or a realization, I am taking that special situation, realization of assets. What are the asset? Capital asset plus depreciable asset. Realization of assets between, to whom? Associated person. Associated person. The special scenarios under realization, section 46 of the Act. Section 46 of the Act. Then you have to look at, this is a common provision now. Then you have to look at under the special provision of section 46. There is a special tax treatment. Yes, there is special tax treatment. What is the special tax treatment? Now, if there is a, if I have came to here, the gains liable like this, but again the depreciable asset when it comes to, this is a gain for which is assessable charge. Assessable charge. If there is a loss, from here, if there is a loss, it is balancing allowance you can deduct. Balancing allowance you can deduct arriving into business income. And the capital asset, if there is a gain, yes. If there is a loss, if there is a loss under section 17, you can deduct the loss. This is a normal provision. Now it's a realization of asset between the associated person. How to compute the gain? It's the next one. How to compute the gain? How to compute the gain? The section 46 subsection 2, sorry, subsection 4 talking about the 46 subsection 4. It's talking about when the assets are transferred in between associated person, the immediately prior to the realization, it's transferred at the net cost by the person who transferred the asset and the person who acquired the asset assumed to be incurring the same cost. Then the consideration also net cost, the purchased, the other party is purchasing, that cost also net cost. Then there is a gain? There is no gain. Gain is 0. This provision is a normal provision, is irrelevant when it comes to a special provision. Okay, come to this. Then how to compute the gain under section 46 under associated person, where I will take that. I will remove this part and I will take that because I need to take this in a high level. Actually this kind of adjustment tested first time in your paper like that, last time that changing of control has tested. This is also a fairly new adjustment to you all. Okay, how to compute the gain? We will come to that. Section 46 subsection 4 and subsection 5 you have to consider. Then in that how to take in the cost. It is the gain equal to net cost minus, for this is the net cost from the side of the HCL is a transferring at the net cost, and the other person, the two new companies incurred the same expenses as transfer. If they transfer in at rupees 100, the two new companies also incur in rupees 100. Gain is 0. Therefore, due to the gain is 0, the income tax implication on this, even the capital asset, even the depreciable asset and the trade in stock, all these things are given in this particular section. Therefore, there is no income tax implication. No income tax implication on this. Clear? Okay. Then this is how you are coming to the answer. I know this is a little bit difficult, but you can try. Okay. Let me go to this the suggested solution for you. I thought it's good to discuss that one also. Take in 5 minutes. I will discuss the answer also in there. This is the answer by the examiner. Yeah. Then I'm not going to do read the whole thing, but I need to go for the last part. The section, this, since you have not completely maybe know about this section, maybe some know, maybe don't know, then I thought it's good to take this. Under section 46, the subsection 4 and 5 of the section 46 of the IR Act, in this this part is there, where a person realizes an asset being trade in stock, a depreciable asset, an investment asset or a capital asset of the business. In our case, it's depreciable asset and the capital asset of the business. By way of transfer of ownership of the asset to an associate of the person and the requirement of subsection 5 are met. What are those subsection 5 requirements? We will come to that. Before we will read this A, the person shall be treated as derived an amount in respect of the realization equal to the net cost of the asset. That's why Lamai, for transfer HCL, that person who is transferring asset, he is transferring at the net cost of the asset immediately prior to the realization. If I am transferring today, yesterday, what is the cost, net cost of the asset immediately prior to the realization? What is the net cost? It is the amount I am receiving. This is from the side of HCL, no? Then we need to compute the gain from the person who transferring the asset. Next one, the associate shall be treated. This is the associate. Two new companies are the associate. The associate shall be treated that incurring expenditure on the amount referred to in paragraph A in acquiring the asset. That's why then associate also incurring the same cost at what is HCL is transferring. Transfer කරන amount එක කීයද? ඒ ගණනම cost එක විදිහට incur කරනවා කියලා law එකේ කියනවා. Therefore, the gain is 0. Okay. Then, but go for that arrangement, there should be special circumstances. what are those? Accordingly, where a person realizes an asset, being a trading stock, a depreciable asset and the investment or a capital asset of the business, by way of transfer of the asset to an associate person, he is deemed to derive an amount equal to the net cost of the asset immediately before the realization if the following requirements are met. What's the first one? The person or the associate is an entity. It's done. Second one, the asset or assets are trading stock, depreciable asset, investment asset or capital asset of the business of the associate immediately after transfer of the person. Yes, we are talking about capital asset and the depreciable asset. Third one, at the time of the transfer, the person and the associate are resident. Yes, both are resident companies. There is continuity of the underlying ownership of the asset at least 50%, not the 50%, 100% of the underlying ownership of the asset it with the HCL. All four conditions satisfy, therefore you can apply this one, thereby what's the conclusion? For the net cost of an asset or liability at the particular time is equal to, in the case of the depreciable asset, its shares of the written down value. At the newly formed companies are fully owned subsidiaries of HCL, depreciable and capital asset can be transferred at net cost. See how the conclusion has arrived. Accordingly, no gain or profit will arise from the realization of asset, hence no income tax liability. No income tax liability. I know, Lamai, this is little bit difficult, but if you know these, at least these things, you can start writing. You can start writing. If you know this section 46 provision, it is you can earn good marks. Okay, then we will come to the tax implication, which is, it is very easy. The VAT implication, sorry, I will come to the VAT implication. It's a VAT implication against on the transfer of capital and depreciable asset. Capital and the depreciable asset. VAT implication, when it comes to the VAT implication, first thing, Lamai, you have start from the charging section. Now we can't do anything with the charging section without having charging section. No, charging section, section 2, there should be taxable by a person, business or taxable activity carried in or carried out in Sri Lanka within a taxable period. If it is so, and it is there are requirements, if it is satisfied, it is liable for the VAT. Now first thing, transfer of capital and depreciable asset of a business, you have to look at whether it is taxable activity or not. නැත්තම් අපිට මේක tax කරන්න බැහැනේ. Taxable activity or not. Taxable activity or not. How are you going to look at? You should go for the interpretation under section 83 of the VAT Act, the definition of the taxable activity. The definition of the taxable activity. Under the definition of taxable activity, any transaction within the trade, business, profession or vocation other than employment, it's a taxable activity. With this is within the business, then this is a taxable activity. That's the first thing you have to confirm. Second one, if it is taxable activity, is it liable for VAT? Is it liable for VAT? That's your next question. Is it liable for VAT? Then when computing the liability, there is an exclusion for person who transferred the asset to a new undertaking, which is if they cancel the VAT registration and not cancel the VAT registration, based on that VAT liability is depend under section 16 subsection 5 of the VAT Act. Okay, then there is an exclusion, I will come to that. There is an exclusion subject to section 16. Section 16 subsection 5 of the VAT Act. Now with this explanation I will come to the answer of the paper, VAT implication on the transfer of asset. Then we will come to this one, as per the VAT Act, transfer of asset of HCL to newly formed company is a taxable activity. You can start that part. Okay. Then however, in terms of the subsection 5 of section 16 of the VAT Act, transfer of assets from one entity to another prior to the cancellation of VAT registration could be excluded from the liability of VAT. This is lamai, this answer actually you have to think and write whether VAT has cancelled or not. If it is cancelled prior to if we transferred it prior to the cancellation of the VAT registration, this exclusion is applicable. If not, this kind of the exclusion is not there. Normally you have to pay the VAT and input VAT from the other party can claim. Okay. This is from one entity to another prior to the cancellation of the VAT registration should be excluded the liability from the liability of VAT, this special provision. If the taxable activity is carried on or carried out continuously by the other person who is also a registered person. Now the question is, lamai, we don't know this HCL definitely VAT registered person, VAT registered, but these two new companies we don't know, lamai, they are VAT registered or not. Then there is a question, but you can write this answer and under the assumption you can assumption mean if it is registered, this is the tax implication, not registered, this is the tax implication, that's all. Okay. Then carried if also a registered person. Accordingly, there will be no VAT liability on the transfer of asset as the newly formed companies will continue to carry on the leisure and travels and logistics sector business provided the VAT registration is obtained. No VAT if the VAT registration has obtained, they are continuing their same business. But there should be VAT registration to take that exclusion. And next one, in any event VAT will not be the cost to the group as input tax can be claimed by the two new companies if they registered for VAT prior to the transfer of the asset. Okay. Anyway, even if this is going, exclusion is there, but one party is paying VAT and other party is claiming. From the group perspective, there is no VAT, the cost to the group. Okay. This is again one of the little bit difficult, but you can attempt to this kind of the question. At least you can write this part, lamai. At least you can write this part, then it is getting marks to you. Then the applicable, now I am not referring to the answer because I thought it's good to come to the answer if you since these are little bit new, but I am not referring to the answer now. Then we will come to the next question. Next the last part of this question 3 part B, the implication of the tax rate. Implication of the tax rate for the, it's asking applicable income tax rate for the newly formed companies. Applicable income tax rate. Applicable income tax rate. What are the two sectors, which is leisure and tour and the logistics. The leisure and tour, lamai, it's clear. The 100% of turnover is coming from the leisure and tour. Then this is the hotel sector. Then predominantly conducting the hotel business, promotion of tourism. If the turnover is 80% or more, then you can apply the 14%. For all of these, the two companies, can you apply 14%? can you apply 14% under SME sector? These are the good points you can write. You know these things. Can you apply 14% as SME? No. Why? Associated under section 196 definition. Therefore, since being associated person, you cannot apply the 14% under SME sector. You cannot apply the 14% under SME sector. But predominantly sector, you can apply 14%. Now the next one is logistics. Logistics is a service. What is the tax rate? Whether it's a 28% or 14%. 28%. This is clear. 28% or 14%. Then you have to know the theoretical angle. Logistics, you have to go export. Now, if the promotion predominantly sector, there are 5: agriculture, the IT, export, promotion of tourism, and education. 5. In that 5, what the export sector? Export under section 195, it has a lengthy definition. Exports are specified undertakings. Specified undertakings. Under the specified undertaking definition, check whether there is logistics. Come to that one. Come to the PowerPoint. In that, see, specified undertaking section 195. The logistics are it's not here. Then the logistics services such as, I will come to here, is under the specified undertaking. There is a definition of logistics services such as bonded warehouse or multi-country consolidation. Consolidation in Sri Lanka, it is 14% under predominantly rate. For this one also can take the 14% under. It is something indirect way. You have to look at logistic. You should know logistic where it has mentioned it is the predominantly rate. We can go for the export if this 80% or more satisfied. What is the definition of the export? The export means specified undertakings. What is the definition of the specified undertaking? It has given in that the logistic is there. This is the business activity which this logistic has given in the which logistic, the import and export of products, storing and local transport, then this is eligible for the 14% rate. Both newly owned subsidiary company, they can apply 14% under predominantly. One is for the promotion of tourism, other one is the under export. Under the logistics, they cannot apply SME 14%. You should write this. Should write why they cannot apply the 14%, because associated undertakings. For 10 marks, if you have try on this, at least the 50% of the marks you can earn. I am not telling to take the 100% this kind of the question if it is difficult, but try to pass the question. It's a 50%, okay. Then next one, next 2 questions on the case law provision, which is really easy. Again, I am doing the same thing. Now, okay, here when doing the writing the conclusion, the conclusion should be the 2 conclusions. One is the three conclusions. Income tax, there is no income tax liability on the transfer of the capital and the depreciable asset. Secondly, the VAT, if it is that condition satisfied, not liable, and if the registration has not done, that part is the second. Third one is on the income tax rates. Under income tax rates, how lower rates applicable, and finally accordingly they can apply the lower rate of the 14% under predominantly sector. The three separate recommendations, conclusions you have to provide. Then the part C of the question, again for the 5 marks, it's easy. The part C of the question 3, we will analyze the question again, discuss whether the options given below by the Assistant Commissioner are correct. Now what's your action verb, Lamai? It is discuss. In discuss, you have to argue. You have to argue whether this Assistant Commissioner's view is correct or wrong. The view has given, Assistant Commissioner view has given whether it is correct or this is wrong. How to prove? You have to confirm your answer. Confirm your answer. How to confirm? The examiner has given the referring to the provisions of the Inland Revenue Act and the case law. How to confirm? Based on the case laws and the IR Act number 24 of 2017. That's all. This is a requirement of the question. I have analyzed the requirement. Now, what is the importance of analyze the requirement? Some students are only writing the act. Some students are only writing the case law. But your answer should be combination of these two. The marks are allocated to the application of the both law provisions. Okay. Then we will go for the Roman 1. Starting here, the Roman 1 of the requirement. As a CSR practice of HCL's healthcare sector, certain health facilities are provided free of charge to needy people every year. It is their policy. HCL healthcare sector policy is providing certain health facilities to needy person. Whoever the person wants that needy, they are providing. During there is no discrimination. That's the first thing you have to understand. During the year of assessment 1819, this is not in our year of assessment, this is 1819, HCL employees' mother's heart surgery was carried out free of charge and the relevant cost was charged to CSR expenses. We have seen that even this year there was a CSR expenses. The Assistant Commissioner is of the view that the value of the benefit, that is the cost of the surgery, has to be considered for PAYE tax purposes of the relevant employee by treating it as part of the profit from employment. Now, there is a view of Assistant Commissioner, this medical benefit received to employee's mother of the HCL group, then that should be included to the employment income. How are you going to start your answer? How are you start your argument? First thing, Lama, start from the theory. What is the theory now? This is a question on what employment income. What I need to tell, the employment income is not included in this 2020 curriculum for your level. But Lama, in this is law and tax pillar. When you are coming, reaching the upper level to this pillar, the BL7, you are learning the employment income. But the case laws on the employment income has given in this level. Combination of all has tested. Come to this, what's the requirement? Discuss whether opinion of the Assistant Commissioner is correct or wrong. Now you have to give your opinion against the Assistant Commissioner opinion or prove that Assistant Commissioner's opinion is correct. Then first thing is, it is asking the what the Assistant Commissioner is telling is a part of the employment income. You have to start from there. What is the I am giving the answer format. answer format for 5 marks. Then first thing you have to start from the you have to start, which is this part of the employment income? Where employment income is in the section 5 of the Act. What is section 5 of the Act? The gain and profit from employment. Profit from employment. Gain and profit from employment. Second one, the inclusions to the employment income, section 5 subsection 2. It has mentioned that the fair market value of benefit to employee or associate or the gift received on behalf of the employment, it should be part of the employment income. This is section 5 subsection 2H and this is section 5 subsection 2I. If it is now in the law, there is an issue. Not there is an issue. For us there is an issue, which is the on behalf of employment. Now first thing, all this benefit should be received on behalf of the employment. That's why you have to look at this. Under employment income, if it has received on behalf of the employment, on the fair market value of the benefit, it should be taxed at the employee, even it has received to the employee or the associate of the employee. Now who is the mother? Mother is the associate of the employee. Now, okay, now seems to be it is part of the employment income. This is again a theory. I will tell it. This is theory. This is theory. Now you have to apply. How to apply? You need to check whether then law එකේ මෙහෙම තිබ්බට you have to check whether is it received due to employment income, due to employment. Then my answer is no, lamai. This is not received due to employment. This is not received due to employment. Why I am telling like this? It is the policy of the company. It is the policy of the company to provide the benefit as the CSR expenses, to provide benefit to the needy people. Even I am not being an employee, I am eligible for this. My mother is eligible for this benefit. Therefore, this is not received due to employment income. Then I have told it, but I need to support it from the case law. What is the case law, lamai? The Kanaka Sabapati versus CIR. The Kanaka Sabapati versus CIR. Then in the Kanaka Sabapati versus CIR case law, what has happened? It is again a medical expenditure. Now you have to take the points of the case law in that the money received under health insurance. I will take the case law provision to this side. The application of case law. Here, money received on the health insurance scheme. Health insurance scheme, the money has received. Why money has received? Due to the illness. Why received? Why it has received? This is actually reimbursement in the case law. Reimbursement of the health insurance expenditure on behalf of that employee's relative. Okay, why it has reimbursed the employee's mother, that why that medical expense has reimbursed, because due to the health condition, due to the health condition of the mother. Due to the health this is the points of the case, decided case law. Due to the health condition of the mother, not because of the employment, not due to employment. Therefore, in the case law very clearly it has given, this is the payment, this is a payment remotely connected to the employment. Remotely connected to the employment. That's all. Now this entire case law you have to plug here. This is not the payment which this employee has received due to his employment, but as per the practice of the organization of HCL, they have given this medical benefit to the surgery, this facility to the employee's mother. This is not the part of the employment income. Then the conclusion based on above the provisions of the IRD Act and case law, this is not part of the employment income. Are you finished from here? No, you have to write. Therefore, the view of the assistant commissioner is wrong, incorrect. You have to write that it is a conclusion. For 5 marks, Lama, if you wrote like this, it is 5 out of 5 you are receiving. Now for, I am ensuring all of you all can write this. These are very the direct questions. All of you all can write this. Okay. Then it's for the 5 marks. Then Roman 2, HCL has established an employee share option plan, ESOP, where shares are issued to senior executives. One of the executives has sued the company claiming his entitlement for the ESOP. The litigation expense incurred by HCL was deducted as an allowable expense for tax purposes in year of assessment 18-19. The same type of thing, the last paper it has discussed. This is the A.W. David Tappuhami versus CIR, that particular case. Then litigation. Then the assistant commissioner is of the view that such litigation expenses cannot be deducted in computing the taxable income of HCL. What is your argument? Yes, in here assistant commissioner view is correct. Then I will analyze the answer point again. This is theory. These are application, and this is the conclusion. Okay. Don't forget this is employment income and this is case law. You are not awarded the marks. Maybe the minimum marks awarded. You should do the application part. Okay. Then Roman 2 of the discussion. The Roman 2, it is litigation. What is my again subject action verb is discuss the expense. This is talking about expense. What is the expense? Litigation expense. Litigation expense. Litigation expense on what? The secure or the benefit of the share, the benefit or rights of the shareholder. Benefit of the shareholder, that if not, it's the rights of the shareholder under employment share option scheme, ESOP. the employee share option scheme. Under that there is a litigation claim. The one employee has sued the company. Now lamai, you have to look at two things: deductible or not deductible. Deductible, not deductible. For both of these litigation expenses, what's the section? Section 11. Section 11 subsection 1. It's talking about three things. Expenditure shall be incurred during the year. Incurred during the year for the production of income other than capital nature. Other than capital nature. CN is a capital nature. Shall be incurred, correct. During the year 2018 and incurred. Yes, other than capital nature, correct. You have to look at whether it's incurred for the production of income or not. No, this is not incurred for the production of income. Then you have to write, now this is a theory. Then you have to look at the right, however, this is not incurred for the production of income. Why this is not incurred for the production of income? This is for the employee share option scheme. From this, there is no revenue generation for the company. No revenue generation for company. Therefore, this is not deductible under section 11. This is application. Now again you have to write the case law provision. What is the case law provision? A.W. David Tappuhami versus CIR. In here, what has happened? Same subject matter, litigation expense on what lamai? The securer share the rights of the Candy Ice company. Then in that the same argument has given this expenditure is not incurred for the production of income. It's just mere the securer the benefit of the shareholder, which is not directly connected to the business, therefore cannot deduct. Now this is again the application. This is theory. Then the conclusion as per the Inland Revenue Act provision and the case law, this is not deductible. Therefore, the view of the Assistant Commissioner is correct. For 10 marks, is it difficult? For entire 50 marks, you can take since the suggested answers are there, I am not giving the answers, but all the answer formats and how it should be literally, how it comes, I have explained, like in the online paper which I have done. Then this is the end of the discussion of your 50 marks, which is question 3, 30 marks calculation part we have done, and this 20 marks we have completely analyzed the scenarios, knowing the action verbs and analyzing the requirements and the sub-requirement. Please follow these things. I am not telling do these things in the examination if you don't like, but however try to take the maximum marks by approaching the question in the way to answer to the question. Okay, then I will meet you again with discussion of the next 225 marks question. For time being, thank you very much.